Good morning, students. We are on chapter number 9 of account part 2, that is accounts of non-trading concern. And here in this lecture, we are going to talk about the accounts of non-trading concern. So, accounts of non-trading concern, and topic is also accounts of non-trading concern. Generally, there are two methods of maintaining account: mercantile system and cash system. Mercantile system is what? Under this method, expenses paid and income received during the year are considered with unpaid expenses and outstanding incomes are prepared. Trading institution maintain accounts under this method. Friends, we have seen this. Now, trading institutions financial statement we have seen, and throughout the year we have learned about the recording transactions. So we know that the transactions are recorded on the basis of mostly on mercantile system. When financial statement we prepare, we consider the outstanding expenses and outstanding income for that particular year. Also we consider the prepaid expense or pre-received income for that particular year. So this is first system, that is mercantile system, and second is cash system, where only cash is considered. Under this method, to prepare accounts, only cash expense and incomes are considered. Let us talk about the accounts of non-trading concern. Generally, non-trading concern prepare their accounts as follow. Following two accounts are prepared. One is receipt and payment account. Second is income and expenditure account. Friend, receipt and payment account is just like cash account, and it is having two sides. One side is receipt side, another is payment side. If cash comes in by any way, it is recorded at the receipt side, and whenever there is an outflow of cash for any reason, it is recorded at the payment side. So this account has similar nature to cash account, cash book. In this, balances of cash and bank as well as cash income and expenses are recorded. Okay. Second, income and expenditure account. Friends, this account is quite similar to profit and loss account and of trading concern. The income and expenditure account is prepared on the same rules as the profit and loss account. That the only revenue income and revenue expenditure of the current year are disclosed. The revenue incomes are disclosed as at the income side, and that is credit side, and revenue expenses are disclosed at the debit side, that is expense side. Now at the end, after recording all the income and expenses, considering outstanding income, outstanding expenses, pre-received income or prepaid expenses, the account balance of account is done. The balance of account is done. Maybe there is a credit total is more than debit total, or debit total is more than credit total. If credit side total is more than debit side total, it is known as excess of income over expenditure, and it is added to the capital fund in balance sheet. And if the debit total is more than the credit total, that means it is an excess of expenses over income, and it is deducted from capital or permanent fund in balance sheet. This account is similar to profit and loss account and trading account concern. And of trading concern, the income and expenditure account prepared on the same rules as of profit and loss account. The only revenue incomes and revenue expenditures of current year are disclosed. The excess of income over expenditure of this account is added to the capital fund in the balance sheet. The excess expenditure over income is deducted from the capital fund in the balance sheet. Alternatively, the balance of income and expenditure account, that is excess of income or excess of expenditure, are disclosed separately in the balance sheet. So either excess of income or excess of expenditure added or deducted from capital fund, or it can be shown separately at liability side of balance sheet. What else? In addition to these two accounts, one balance sheet is also prepared to know the economic status at any particular date. At the end of the year, to know the economic status, the non-trading concern prepare balance sheet. Capital is known as capital or permanent fund by these kind of concern. The remaining items are similar to the balance sheet of the trading concern, like asset, income received in advance, income outstanding, prepaid expenses, outstanding expenses, payable and receivable, etc. The balance sheet of income and expenditure account available. The balance of income and expenditure account available in the form of excess of income over expenditure is added to capital fund on the liability side of balance sheet, and the excess of expenditure over income is deducted from capital fund on the liability side of balance sheet. Okay friends, so these are the accounts prepared by non-trading concern. One, it was receipt and payment, and income and expenditure account, and a balance sheet. Okay friends, so this was about accounts maintained by non-trading concern. Next lecture we will talk about the difference between trading and non-trading concern. Thank you.